I would love for you to share first, how do you think that institutions profit from our financial uneducation?
Well, I think the system, our economic system, is designed to keep the majority of people poor. And our economic system is designed to profit off of when people are financially poor. Now, you might say, Jaspreet, you sound like a conspiracy theorist. Well, I'm not trying to be conspiracy theorist-y. I'm just trying to explain, after learning about how money works, you start to see why certain things work the way that they do. And I'll explain exactly what I mean. Banks profit when you're in debt. If you have credit card debt, your bank is making money. If you're overdrafting, your bank is making money. If you are spending money on cars that you can't afford, your bank is making money. When you go out and buy a home you can't afford, you're borrowing more money. And at the end of the day, the more debt you take on, the more your lender makes. The second thing is corporations profit when you're in debt. What does that mean? Well, corporations love it when you spend money. Corporations want you to buy their stuff. So if they can get you to buy something through their marketing, because remember, they're hiring the smartest marketers and MBAs in the world to get you to want to buy things, they're making money. But what if you can't afford it? Well, they can then sell you the financing to buy their products, and now they make even more money because now they get to sell more stuff. So corporations love it when you're financially uneducated because now they can sell more of their things. Governments love it when you're financially uneducated because, well, number one, if you're financially uneducated, that means you're going to be an employee and you're going to be a consumer. As an attorney, who's not your attorney, what I can tell you is that our tax code in the United States taxes income differently. When I make money from my investments, let's say I sell my stocks and I make $1 million, and you make $1 million as a doctor, a surgeon. You go to work every single day to make the $1 million. You're going to pay half of that in taxes, depending on where you live. If you're in California, half of that's going to taxes. As an investor, I'm paying 20% in taxes. So people who are employees pay the highest tax rates. It's called ordinary tax rates, versus investors pay less in taxes. That's part one of how governments profit. But also on the flip side, which is consumption. And what I mean by that is, well, if you look at now the United States government's balance sheet, and I don't want to get too technical, but what a balance sheet shows you, every single company has a balance sheet that shows the assets and liabilities. The number one asset on the United States government balance sheet are student loans. Now, this one is interesting because obviously there's a lot of talk about student loans and how they're keeping the average person back from buying a home, buying a car, and building wealth. Well, student loans are also funding the government's spending. They are the largest asset on the United States balance sheet. And if you don't believe me, just go to Google and search the largest asset on the United States balance sheet and you'll see. So there's this, talk of student loans are hurting our citizens, but at the same time, the government loves the student loans that they're selling you because they keep funding the government's spending. Now, I'm not going to get into if the government spending is good or bad. That is up to you to decide. But one of the biggest assets there are student loans. This then creates naturally a sense of anger. Banks are evil, corporations are evil, the governments are evil. And now I want you to take a deep breath. And now let's flip the script a little bit, because I want you to understand the way that this works. That way you can use the system and learn how to win in the system. Because there are some people that learn how to use banks and they use the bank's money to make them money. What do I mean by that? They use debt to buy businesses or to buy rental properties which make them money. You don't have to use debt. I'm not advocating for it, but I'm saying that's an alternative way to look at it. Or you can use banks as a place to hold your money and pay you interest, as opposed to just paying the bank's interest. Like when I keep my money in a high interest savings account, the banks are paying me interest as they hold on to my cash. And I'm not sending them a check because I don't have any credit card debt. Corporations, I like some nice things. There's nothing wrong with having nice things. You want to be able to buy nice things. You just don't want to be buying them when you can't afford them. So that means corporations want to sell you stuff. Fine. I mean, that's what every corporation in the world wants to do. If anybody starts a business, they want to sell their product. The problem is people get really negative about it because they feel like they keep buying things that they don't want. And so now you got to have that filter. Okay, corporations want to sell me things. That's a fact. Now, I don't have to buy it. Oh, okay. When you realize that you don't have to spend money, now you are in control as opposed to letting them be in control. So just because Macy's has a sale doesn't mean you have to go out and spend at Macy's. And now when you have your money and you know how to use your money, you can use corporations because guess what? Now when you want to buy something nice, you can benefit because you can enjoy the value that you're purchasing. I have nothing against somebody buying nice things, buying a nice home, buying a nice car, buying nice clothes, buying nice stuff. Just make sure you can afford it and make sure it's something that you want instead of letting the corporation decide that you need to spend your money. It's the same with the government. Hate it or love it, the United States is the best place in the world to be. And they have the strongest military, the strongest economy, and our system, hate it or love it. This one took me a long time because this one made me really angry. But I'll just lay it out. Our IRS tax code and our government incentivizes and is designed to benefit the financially educated, the wealthy, and the business owners. Period. Now you can hear that, get angry, kick, scream, cry, complain, or you can learn and use it. I will let you decide what you do with that information. But our system benefits certain people more than others. If you are an investor, you qualify for lower potential tax rates. If you are a business owner, you qualify for higher potential tax deductions. If you are an employee, you don't. If you are in debt to the government, you're going to keep paying the government. If you're not, you get to benefit from the government services. And so this is where now I want you to understand the game, learn the rules to the game, that way you can win in the game. Because what happens to most people is they're playing in this system, but they don't know the rules. They don't know how money works. It's like playing football. You go to the NFL and you're playing without a helmet on. You don't know the rules. You're obviously going to get hurt. And that's how the majority of people in America particularly are playing. They have no idea how the system works, yet they're grinding every single day, wondering why I have no money left over, wondering why I have no ability to have any freedom, wondering why that rich person, your rich boss, that greedy person is taking all of your money. They're exploiting your hard work. And you're sitting here trying to figure out how you can feed your family. But in order for you to break out of that system, you got to change the way you think. You got to change what you learn, and you got to change what you do. And that's going to allow you to live a completely different life, because this system allows for that too. But most of us never learn that because schools don't teach that either.
The rabbit hole goes deep.
It does.
And, I just love how you shared about it's really like a bug in our code of this consumerist mentality that thinks we always need these things that we don't need, and programming things to want things and think that we need them. And
yeah,
it runs so deep. I too enjoy nice things. I enjoy fine quality things. And at the same time, you're sharing how important it is to be able to still just make sure that you can afford it and make sure that it really is enhancing your life and that you really value it. And encouraging that delayed gratification to be able to invest in things that will give you much more financial freedom and mobility down the line than just the compulsive spending that society really rewards right now. And so our listeners, I'm sure, are on the spectrum from people just starting out that don't have any money. They're just starting to figure out what their career is or how they're going to go out and make money in the world, to people that are, riding the horse of their career and they're building momentum and they're growing, to people that are, extremely well off. When you look at advice that can be the fundamentals, principles that support everybody, no matter where they're at, what are the baselines? I know you kind of briefly mentioned assets versus liabilities. Like, what are the kind of principal, fundamental things that everybody should know when it comes to money?
So I'll break down the playbook step by step, and I'm going to make it very simple and basic, because building wealth really is not rocket science. You don't have to be a genius, but you have to be able to, number one, invest in your financial education and be willing to make sacrifice. If you can do those two things, you have the ability to build wealth, especially if you're in a first world country. Number one, he's got to earn money. How do you earn money? Doesn't matter. Assuming it's legal. Okay. If it's illegal, don't tell me about it. But you can make money from your job, make money from your business, make money from side hustles. I don't care. You got to just start making some money. Number two is, when you make money, don't spend all your money. And now, when you don't spend all your money, the reason why this is difficult is because most people assume that if I have $1,000 in my pocket, I can buy a $1,000 TV. No. You got to stop spending all your money. The more you keep, the wealthier you'll become, because then number three, you take the money, don't spend. You buy assets, not liabilities. So a liability is something that I buy that takes away my money. Your car is a liability. Your clothes are your liabilities. Your vacations are liabilities. Your home is a liability. Every time I say that, this is going to make people angry. So let me explain what I mean. An asset is something that puts money in your pocket. So when I say your vacation is a liability, this is the first thing that really gets people upset because they say, no, Jaspreet, when I went on vacation, it was a way for me to relax and recharge so I can make more money. Sure. But how much did the trip from Cancun make you? Cost me $6,000. Okay. Did Cancun put any money back in your bank account? No, but if Cancun is not direct depositing money in your bank account, it is a liability. I'm not saying don't spend on it, but you got to understand the difference between an asset and a liability. That way you can have more assets to buy more liabilities. The second thing is I say your home is a liability. And the reason why is because I got started investing in real estate during the 2008 real estate crash. And I'm from Detroit, Michigan. And Metro Detroit.
No way. I grew up in Livonia.
No way.
Like 20 minutes from you.
Oh, there you go. Our office is downtown Detroit. So you remember then Detroit was hit extremely hard. Livonia was hit very hard by the 2008 crash. Homes in Livonia were selling for 80% off of what they were selling for before.
Crazy.
It was crazy. And prior to that, everybody assumed home values only go up. The reason why everybody says your home is an asset is because, number one, you're a realtor, and I'll tell you this because I was a realtor. You're trained as a realtor to say your home is the biggest investment you're going to make. And when you think your home is the biggest investment you're going to make, guess what? Oh, well, if I'm going to be able to pass down this home to my kids, maybe I should buy a little bit bigger. Maybe I should buy a little bit nicer because, I'm going to build wealth with this home. I'm going to pay it off and I'm going to have this equity in my home. Then what happens is you move into the home. You want to upgrade the kitchen. You want to finish the basement, right? You want to have a nice man cave in the basement. And then a few years later, something's going to happen to the bathroom. Now you want to upgrade the bathroom. It turns into a money pit. So now you're paying every year to maintain the home. You're paying every few years to upgrade the home. You got to pay for the property taxes. You got to pay for the insurance. But at least your home is going up in value, right? Maybe. It only really matters when it comes time for you to sell. Because if it comes time for you to sell and you can't sell it for how much you bought it for, which is what has happened in the past, then it's not, you're losing money. And even if it is worth more than what you bought it for, that means you have to sell your home to actually make any money. So that's why I want you to think of your home as a liability. Even if you financially have it as an asset because there's equity in your home, whatever. Think of it like a liability because those dollars that you're putting into your home for your maintenance, for your upgrades, for your taxes, for your insurance, for your mortgage, you're not getting any of that money back until it comes time for you to sell. And there's no guarantee that you're going to be able to sell it for a profit. And if you say, but Jaspreet, I can refinance money out of the home. You got to pay that money back plus interest. Okay, so if you're going to have to use debt to use your own money, I don't like that idea. So that's why I like to look at these things like liabilities. And instead of spending all my money here, I would rather spend my money on something that's actually going to make me money. What are real assets? This might be your own business. This might be stocks. This might be real estate. Now you might say, well, Jaspreet, the stock market can crash. You might not make money in real estate. You might see your business fail. Sure. But what was my mindset going in to buy these assets? When I invest in a business, in a stock or real estate, I'm buying it with the sole purpose of making money. When I go and buy a home to live in, I'm buying it to make memories, to live in. I'm buying it for the experience, not for the financial reasons. When I go out and buy a rental property, I'm buying it that way the cash flow, the rental income can pay for the expenses and put some money in my pocket. When I buy stocks, I'm buying it because I believe that this is going to go up in value or it's going to pay me dividends, meaning cash. Literally deposit cash into my bank account every 3 months because some companies pay dividends. It's a very different mindset. And you're going to screw up with this. Sometimes these assets are going to lose you money. It's a part of the process, okay? You are going to lose money at some point. Every good investor does. But that's also how you learn. And that's what's going to allow you to make even more money if you continue investing. So now, step number 1, make money. Step number 2, don't spend all your money. Step number 3, buy more assets than liabilities. A simple rule of thumb here is if you're paying $500 a month for your car, you better be paying at least $500 a month for your investments. Step number 4, when you start making your money from your investments, reinvest the cash flow. So let's say now you start putting some money into stocks, into real estate, and you start making some money. Well, the first thing that can be very exciting to do is, oh my God, I'm making some money. Let me go buy a new vacation. Let me go buy a new car. Let me go buy some new shoes. What I want you to do now is take the money that your money made you and buy more of that asset. And the goal right now is to stack your assets. When you're trying to build wealth, you got to start by stacking the assets. That way you can build your wealth first, because I want you to make yourself rich before you make Gucci rich, before you make Louis Vuitton rich, before you make everybody else rich. Make yourself rich first.
There's a lot of joy that comes from that financial discipline too, because of course you want to increase your lifestyle as you make more money. But if you apply that discipline, the delayed gratification is much more satisfying.
It is once you get to that.
And I don't always follow this, like I'm preaching right now. I've definitely invested in my lifestyle a lot over the years that I do believe has returned back to me, and the connections that I build and like lots of different things. But continue.
I am a big believer of make yourself rich before you make everybody else rich, because that's going to lay the foundation for the rest of your life. I call it a decade of sacrifice. That if you're willing to spend less and earn more so you can invest like crazy, the rest of your life, you can now spend more money and not have to worry about the price tag, because now you have the investments and the assets to pay for it. And that's why you're from Livonia, right? In Michigan, we get snow. And if you ever built a snowman before, you start off with this little pile of snow, right? And then you put it on the ground and you start rolling it. In the beginning, you're not seeing any progress because you want to build this big ball of snow. But in the beginning, you don't see anything. But if you keep rolling, it's going to get bigger and bigger. And if you keep rolling, it gets bigger faster. Like every time you turn it, it gets even bigger. That's how your wealth works. It's called the compound effect. That in the beginning, you start saving and investing, you see no returns. Right? A 10% return on $1,000 is $100. It's nothing. But a 10% return on $100,000 is $10,000. And a 10% return on $1 million is $100,000. See, it's the same return, it's the same percentage, but the amount of dollars you can get as you invest more money is a whole lot more. And that's why in the beginning, I say you got to be aggressive. You got to spend less, earn more, invest more. When your investments make you money, reinvest it. Just keep dumping it in, because for that beginning, you got to get aggressive for you to build that big wealth pile. So we talked about number 1, earn money. Number 2, don't spend all your money. Number 3 is you buy more assets than liabilities. Number 4, when your assets make money, buy more assets. Number 5, figure out how you can make more money. And the reason why I say this is because what ends up happening, I went down this, is you start investing your money and you realize, whoa, I can make money without me having to do this thing. Like I can make money. My investments can make me money, and I can be out on the beach. I can be out running my business. I can be out doing whatever. And I'm still making some money. I want to own more investments. And so now the first thing that I did was I started spending less money, because if I spend less money, I have more money to invest, which is fine in the beginning. And I went to an extreme. Like I stopped spending money on everything you can imagine. I mean, I was really cutting back on everything that I could. But there's a limit to how many pennies you can squeeze out of your paycheck, or how much money you're making. Like there's really a limited pie. Eventually, you won't be able to squeeze more pennies out. And that's when I realized that, wait, if I earn more money, now I can also have more money to invest. And if I'm working to earn more money, there's no limit now to how much money I can make, because there's a limit to how many pennies I can squeeze out of my paycheck, but there's no limit to how big I can grow my paycheck. And this is where now understanding what are the different ways that I can earn money. If I'm working a job, maybe that means I see if I can get a raise, I get a bonus. Maybe I work to get a promotion. If I can't do it in this job, maybe I got to get a new career. Maybe I have to go get a certificate. Maybe I have to go and go back to school. Maybe I have to go and get a second job. Maybe I have to go and do something else. Yes, it requires more work in the beginning especially, but you can change the trajectory of your career. Maybe that means you start a side hustle. Maybe that means you start a business. Maybe that means you invest more in your business, right? I mean, there's so many ways to go about doing it, but now it's really diverting some attention and energy and focus and maybe even money on how you can earn more money so you can buy more assets, not liabilities. And when you do that, that's going to allow you to build more wealth. Now, the thing that I like to mention about this is have a system that allows you to grow your investments with how much money you're making, that allows you to grow your savings with how much money you're making, but also allows you to grow your spending with how much money you're making. So a simple way to kind of look about this is one of the things I talk about is a 75-15-10 plan, which says for every dollar that you earn, 75 cents is the maximum that you can spend, 15 cents is the minimum that you're investing, 10 cents is the minimum that you're saving. Now, what happens is if you're making $5,000, you know that there's a limited amount of money that you can spend. If you make $50,000, you can spend more, but you're still investing your money more. You're still saving your money more. That way, hey, you want to go out and buy more nice stuff? Cool, you can, but you're also investing at the same time. Because at the key, right, the goal is just to buy more assets. It doesn't mean that you can't buy some nice things, but just make sure you're also prioritizing the assets. Make yourself rich before you prioritize making BMW, Louis Vuitton, and everybody else rich.
If you have $100 in your bank account and you want to buy this $1,000 Gucci scarf, your bank would love to lend you the $900 at 25% APR, because when you make the minimum monthly payments, your banker gets richer. But that's just the beginning. When it's time for you to buy a house, who do you ask? How big of a house should I buy? Many times it's your banker, and they're not your financial